Welcome to today's Prime Professional, and I'm really excited for today because we've got some great news from Miami-Dade County and just great news in general, and I got two special people on. I have Sonia Hickman, who is the president of the National Association of Real Estate Brokers here in South Florida. Welcome, Sonia.
Hey, everyone.
Give her a round of applause. Yes, come on, come on.
Hey.
And then I also have with me Vincent Burnett, who is with MDEAT. Yes, Miami-Dade Economic Advocacy Trust. We are so glad to have you here because I know you are sharing some really great information. And Vincent, you are the HAP Outreach Specialist.
HAP Outreach Specialist.
Okay,
it's a long title, but we shorten it.
All right, okay, I like that. We'll make that work. Okay. So with that said, we're just going to get right into it, okay? But before we do and really talk about some of the major changes with the program, tell me a little bit about MDEAT for the folks that don't know MDEAT and what's it all about?
Okay, what we're all about. Well, actually, if you're in our office, you owe me $1.
Okay.
Every time we say MD,
MDEAT, right? Right, it's $1.
We're Miami-Dade Economic Advocacy Trust.
Okay.
And we've been around since and our mission statement is to ensure the equitable participation of blacks in Miami-Dade County, in Miami-Dade County's economic growth through advocacy and monitoring of economic conditions in Miami-Dade County via economic development.
All right.
And we have a one band, one sound approach. We have previously we were known for Teen Court.
Okay.
Now it's been retooled called Youth Services.
Okay.
Economic development for the small businesses. We do the small business capital.
Which I know right now there's a major push to really work with a lot of the local black-owned businesses, right, and supporting them. And you've always supported them, but I know there's more of a push now with this year. So tell me a little bit about that too.
Exactly. We have, particularly with the small, we provide technical assistance, and we have a small business capitalization grant.
Okay.
I believe, and correct me if I'm wrong, because this is not my area, but it's one band, one sound, but I'm in the housing division.
Okay.
But in the economic development division, I believe they gave approximately, I know at a minimum, about 12 applicants.
Okay.
$5,000, if I'm not mistaken.
Fantastic.
I think 12 times 5 is 60,000. I believe they even gave it a little bit more because they had a closeout during Black-Owned Business Month in August.
Okay.
And some other small businesses were recipients of the $5,000.
Oh, that's fantastic.
And upcoming, I believe they're going to give $10,000.
Okay.
I'm not sure just how many. But part of what they do, they provide small business grants. Those are grants to the small businesses on the economic development piece. And I'm in the housing division, obviously, in order to have equitable participation for blacks and all minorities and all low to moderate borrowers here in Miami-Dade County.
Exactly.
Home ownership. And
we know that it's needed, right? Especially with rising prices, and in addition to that, the interest rates going up, right? So housing is really important for the growth of Miami-Dade County. And I know that's why we also wanted to have Sonia come on as well to talk a little bit about NAREB, what the organization is about, how this particular program has helped first-time home buyers and real estate agents. So tell me a little bit about NAREB as well.
So again, my name is Sonia Hickman. I am the local board president for the National Association of Real Estate Brokers. And our local board is called the South Florida Board of Realtors. I've been in place almost a year now, and heading up on my second year.
Fantastic.
It's been an interesting ride, just learning about, the housing market, and the housing market has changed so much since I took office in January. We skyrocketed real quickly. The interest rates were low, and just as fast as it went up, it came back down.
Just that quick, right?
Just that quick. It was like, okay, wait. And so, and it's been interesting because the people that I've been speaking with, they're like, okay, but I still want to sell my house at $1 million, but it won't sell at $1 million right now. Anyways, let me go back to what we do is our whole purpose is to create democracy in housing. We are one of the oldest real estate trades in the U.S.
Right.
NAREB was formed in 1947 in Tampa, Florida. As a matter of fact, we just had our 75th anniversary in Tampa, Florida, which was a big to-do. It was something else. NAREB is the reason why realtors can practice real estate.
Right.
We couldn't call ourselves realtors back then.
Back then at all. Right.
Not at all. So we got together. It was 11 men, and of course, one great woman. You always need a woman.
Story, by the way.
Even our camera guy is laughing at that. We had one good woman as well, and they formulated NAREB in 1947 in Tampa. And as a result of that, this is why we are able to practice. But they wouldn't allow us to call ourselves realtors. So we created the name Realtist. So that's why we go by the name of Realtist. And if nothing else, even if you're not an active member of NAREB, you should be a member of NAREB.
Absolutely, you should.
Just because, this organization is the reason why you can practice real estate right now, So tying in with MDEAT, our people over here at MDEAT, we love them.
It always comes back to me.
It always comes back to you.
It's going to come back to you because you're the money man, you're the bank.
Absolutely.
You're the bank. We're finding the people out here for you, and our thing is to create democracy in housing, and we work very closely with MDEAT, and not just MDEAT, all other programs as well, so that we can help first-time home buyers get into a home.
Right.
And if it wasn't for people like Vincent and MDEAT, we wouldn't be able to do that. But now that they've increased the limits,
talk to me. It's always going to come back to you. Just so you know, it's going to come back to you.
This is seriously a game changer that they've increased the limits because, with the lower limits, we weren't able to do as much because the housing, what was the previous price?
I believe the previous price point was $318,000.
$318,000. Before that, it was what, $275,
right?
$275, something like that, right?
That was the mortgage.
Exactly.
So what can you buy in Dade County for $318,000?
Really can't, right? It's challenging, right?
Right. So that's a rhetorical question now.
You're right. No, you can go ahead.
Give me an eagle eye. I feel like I'm sitting next to the principal. But
no, I'm not
uncomfortable because I used to go to the principal. I was quite a bit.
Okay.
College, undergrad, even graduate, and my wife.
All right.
But as actually, I'd like to commend our current executive director, William Bill Diggs, and the housing division director, Edwin Miller, and collectively, we've always been around. MD has always been around over the years since 1995, and HAP stands for Homeownership Assistance Program. We've lent over $45 million to black families and to 3,100 black families and 7,900 families in totality. So we've always been around. But as Sonia said, these last 2 years, I would say year and a half, 2 years, certainly from COVID, the post-pandemic, it's just exponentially. Sales prices have gone through the roof. The market is very competitive. Once upon a time, I sold a property once or twice, so I'm very familiar with NAREB and their commitment to democracy and housing.
Absolutely.
And it just really, in the past year, I would say, we tried to just realize the urgency of now that's needed with respect to what's going on with this affordable housing crisis here in South Florida.
Right.
And a couple things. We've increased the limits to try to be a helping hand in that respect. And in the midst of our $45 million, that has been layered with $180 million of other totality down payment subsidies.
So, folks, in a nutshell, there's money out there, plenty of money out there.
And so our goal was to try to, even with the additional layers, whether it's from the city of Miami Gardens, city of Miami, et cetera, we felt that we would be less than putting our best foot forward if we didn't try to increase the subsidies. So I do.
Great.
So our subsidies have went up to $28,500 for a borrower who's between 0 to 80% of the median income.
That's huge.
Just stop right there for a minute. Really.
Let me say the other one because everybody knows the
and say the other one. Go ahead.
The other one is $14,500 for borrowers up to 140% of median income.
So, listen. Previously, it was $12,250. Yes. Okay. Now they've jumped it up to $28,500 if you are below 80% AMI. Okay.
Below, 80 or below.
80 or below, and we'll show you a chart here in a few. And then if you're above that, you get $14,500. Now that's a huge game changer. And you just told me a few minutes ago, is there a sales price cap? Is there a sales price cap?
There's no sales price cap.
Oh man, stop.
But
stop.
Well, you got to buy in Miami-Dade County. You can't buy something in Leon County where get your condo in Tallahassee, Leon County, and go to the family Rattlers game for $100,000. Got to be in Miami-Dade County. Property must be a single-family residence or a townhouse or
folks
condominium unit, but no sales price cap.
No sales price cap. Okay?
One other comment.
And up to possibly $28,500, depending on where you fall on that income chart.
Yes.
And I do want to try and get to that. So I'm going to flip the camera here real quick, show you the chart, so you can understand for the first-time home buyers out there, for the realtist and the real estate agents that are out there, really understanding where the income for a family size may fall and to see whether or not you'll qualify for some sort of money. Okay, so let's do that real quick. Change this. I'm going to share my screen because we also are doing this via Zoom. So give me a moment and we'll take a look at that.
Let me ask you a question, just for our listeners out here. Your program, can you stack it with any other like programs, or is it gifts or is it just your money? If someone had gifts, because the reason why I say that is because we as NAREB, we may have money to give as well. So can my money go with MDEAT's money as well?
Great question. Typically, our programs are stacked. Typically, we're usually always, I would hate to say the word always, we're usually in the second, third, fourth, even isolated cases, we're in a fourth lien position.
Okay.
So that being said, yes, it can be stacked with other providers, first lenders with their first-time home buying programs, where there may be grant subsidies. It can be stacked with other nonprofit entities, and certainly the different municipalities have specific programs depending where the property, for instance, if you're buying in Miami Gardens, they have a program.
Right.
The City of
So
Miami
you can use the City of Miami Gardens program and also use MDEAT program. And then if I come on the back end and give you some money for appraisal and inspection, you can use all three of them.
Come on.
Right.
That's a lot of money. Let's just put it that way.
I will say the catch, though, Mark, I believe you're a lender or you're familiar with the mortgage lending industry. The key is having a realtor that's committed to democracy and housing.
Yep.
And also being committed to it, but being knowledgeable of what's out there.
Yep.
And also having a mortgage loan officer
that's
committed to these same attributes. And not only democracy and housing, say democracy and housing, black equity participation, but committed to affordable housing and the low to moderate income buyer, and knowing all the guidelines to make sure that they coincide with each other.
Right.
We all have to take a step back to the first lender, because the first lender ultimately gives that approval.
Correct.
And then we're just coming in.
We're just stacking up behind it. Yeah. Okay.
Whether it's for down payment assistance or closing cost assistance. And now I'm hearing appraisal and things of that nature.
Yes. Come on. I mean, that's a lot of money on the table. So the other side of this is, and I'm glad you mentioned this, so MD is really taking a lead in this, and you're going to start to see other municipalities, other programs start to increase either their sales price cap or have no cap, right? Or adding some more money towards the subsidies. And I think that's really good. I've already attended a meeting in Broward County, just as an example, that increased their subsidy amount from $40,000 to $80,000, okay? So folks, there are changes that are being made. If you're a first-time home buyer and you really need to access these funds, just know that there are changes being made despite what's going on with the interest rate, despite what's going on in the housing market. We really urge you to jump on in and access these programs that can definitely benefit you, okay? I just want to transition here real quick and see if I can switch the camera here and show you there we go. And this is also being recorded, folks, so we can always switch this and share this with you a little bit later. But on the screen right now, basically, if I'm a family size of one, right, as long as my income does not exceed $89,600, I will qualify for some level of subsidy, right? And that's huge. Go ahead.
Well, that's a yes and a no.
Okay.
And the yes and a no is because little technician, I'm kind of like, I was that guy, the little nerd. We had numbers and this little calculator.
Right.
So this is the basic premise of the table. However, that looks like that's the 2021 table.
So wait a minute. You're telling me now the money and the income has now increased?
Yes, but we don't control that, so we can't take credit for that.
Okay, good.
But we are responsible as far as having the updated table.
Okay,
and
so share with me.
For your question, the yes was based upon what we're seeing on the screen. This is how the table reads. From the 140% median, we go up to that family size of one, that single guy.
Correct.
At $89,600 would be able to receive a subsidy of $14,500. However, since I have the updated table, that
Yep.
single guy or woman would be at $95,620.
More money, income
Love
increasing.
it.
Good.
And so the numbers may vary as you see. You see columns going to the left, to the right, family size from 1 through 8. HUD sets these tables. It's on our website. I'll make sure that you guys have updated table.
And I
in
believe
your office.
every April, if I'm not mistaken,
Yes.
they update those incomes as well. So for the folks, this is 2022's table, but the one that we're going to share with you is 2022's table, but 2023, those income
Will be
levels
coming out again in
will be coming out again, and they'll increase as well. So this is fantastic. And just one more example. If I'm a family size of 4,
Yes.
and let's talk now below the 80% AMI.
Okay.
If I'm a family size of 4, based on your updated chart, what are we looking at?
Okay, and I'll just reference because they are looking at that table.
Perfect.
So family size of 4, we say 50 to 80%. That would be low income.
Uh-huh.
Now that bar, family size of 4, would be as you look on the screen, you see 73,100.
Correct.
So that bar would be eligible for 28,500.
Okay.
And that 28,500, based upon the current table, where you see 73,100, that would be a family size of 4 at 78,000.
At 78,000 now.
Right.
Okay, got it. So folks always ask me, some of these programs you got to pay the money back. Some of them, you have to stay in there for a period of time, and it's completely forgivable. How does this work?
Okay, great question. I'm being alluded. Actually, she mentioned a grant. I'm not sure with the NAREB grant. I want to learn more about it.
Okay.
If I have like a house like 20 years ago, can I get the grant for my appraisal? I never. I have adult ADD moments at times.
Okay, no worries.
But the answer is it's potentially a forgivable grant, but you must do something. Almost all down payment assistance programs, there's something you have to do. It's called put skin in the game.
Yeah.
And one, I'll talk about the borrower contribution later, but more so, with our current program as it exists, we have something called an affordability period. You must stay in the property 10 years.
At least 10 years.
But 9 years, 364 days, we're not committing you to it because the average home buyer, the way this market is going, 1, 2, 3 years, 6
Buy,
months.
sell.
The
Correct.
first 6 months, you would make $50,000. That next 6 months, you're in a holding pattern.
Right.
What happens is, for those borrowers, you must be an owner-occupant willing to stay in the property.
Okay.
If you stay in the property less than 10 years, because that's probably the reservations that you're probably hearing on the street.
Correct.
No big deal. I mean, it's like a 0% interest loan with no debt payments.
Okay.
No debt service payments. So if you move on to bigger and better things, a new neighborhood, family size grows, you sell the home, you must repay us our money, but we're not charging interest associated with it. So
No interest on
So it's
this.
like a 7-year, 8-year, 9-year interest-free loan to help you get in that home you desire.
Got it.
Now, if you stay in there 10 years or more, then it's forgivable.
Right.
And you don't have to pay us anything. So that's $28,000 that we assisted you. I'm not saying we paid you, but we assisted you
But
towards your
here's the
homeownership.
thing. I don't know where you can go in America and get $28,000 interest free.
Not many places. Let's just put it that way.
And 10 years, when you think
Yeah.
about it, 10 years is really not a long time.
Correct.
Right.
Correct.
It really isn't.
Right, and so that's kind of when you're speaking to the layman person who's seeking homeownership.
Mm-hmm.
But those, it's a good thing if you're able to sell your house in 5, 6, 7 years and had the equity appreciation.
Right.
Move on to better things. Basically, you have an interest-free loan, and that money comes back in the pot, so we can provide it for another low to moderate family.
So what you're telling
Right.
me, if you stayed in this home for 5 years and you had $100,000 worth of equity in there, we would only pay back MD the $28,000 or how much was it? $14,000.
Well, either the $28,000 or $14,000,
$14,000.
whatever
And-
you felt in.
and then the rest of the money is yours.
The rest of the money is yours. Right.
That's
We-
not a bad investment.
Not at all.
And like she mentioned, I hate to tell all my family secrets. She knows that I used to go to the principal office. And I'm a stickler for numbers. But even now, I'm a grown man. I used to borrow money from my mother.
Right.
And my mother make me sign not a promissory note.
Right.
Because not a promissory note, which they'll sign in a mortgage transaction. But she makes me sign the good old fashioned, I owe you, I promise to repay,
Yep.
etc. So basically in America, whenever you borrow money, you have to pay it back.
Right.
So it's just that we're laying out a vehicle where potentially you would not have to pay it back.
Correct.
Or in that interim period while it's outstanding, it's not accumulating interest. So not only my mother makes me sign I owe you, but she also charges me interest.
Right. Got it. So, Sonia, I mean, we just heard a lot of great information here. How do you think this can benefit realtors, real estate agents in this market when they are dealing with a borrower who might not have enough money and need a little bit more in order to make that transaction work?
In a first-time home buyer situation, it comes up so often. They barely have enough money. A lot of them, they're saving. Right. They're still trying to pay their bills, live with children, yep. And it's tough to save money if you're a first-time home buyer. You still have to live unless you're in a situation where your parents have allowed you to come back home, to stay with them, but that's not the case in a lot of us. But right. So how this works for us and helps us as realtors is we have the information that we can use. Now, where we have a person that may say, well, I don't have any money, I don't qualify. Right. Here it is right here. Exactly. You qualify now. Right. We have the money for you, where you can utilize these funds to assist you with your down payment assistance. Yeah. Now, what I wanted to ask you was, back to you again, sorry.
Sweating.
Don't worry, we got you.
I don't sweat when you ask me questions, but she makes me nervous for whatever reason.
The principal's office and everything, what do you expect? Okay, yes.
What is the minimum amount that they would have to come out of their pocket?
Great questions, great question. And as we mentioned the tables, and at 80 up to 80%, 1%, the borrower must contribute 1%.
At least 1% of the sales price.
Yes, 1% of the sales price.
Got it.
That's huge.
Yes,
right.
Really is.
And I always have to buffer this because I want to temper the enthusiasm. However, we go up to 140% of median. And as you saw with the tables, the 89,000, which is really 95,000, or the table family of four, the 127,960, which would be 136,500. Right. So obviously they make a little more, but they're still eligible for the 14,500. But their minimum contribution would be 3% of the purchase price. Okay. And again, that's not a bad deal because you have the Fannie 95, FHA I believe requires 3.5%.
3.5%.
So,
yeah.
So again, it's just a matter if that borrower can come with 1% up to the 80 of median, or 3%. I'm sorry, I'm thinking FHA 3%. If they're over from 80, I'm sorry, I have to self-correct myself. And I'm kind of getting, although the threshold of the subsidy switches from 28.5 to 14.5 at 80.01. Right. The 1% is good up to 100% of median.
Got it. And we're going to go over an example as well.
So that borrow, so going back to this table, so while, let's say, I don't know, let's family 2, 4, you can pick a number while the table is showing. Let's say family of 4.
Family of 4.
Okay, the family of 4 at 73.1 would get 28,500.
Correct.
Now we obviously, the minute you exceed 80%, you 73,101, their subsidy would be reduced to 14,500.
Exactly.
However, back to your question, Sonia, that 100% median, at 100% of median, they would still only have to put 1% down.
Got it. Got it. That's fantastic. So although the income might be higher, they could most likely still come in with only the 1% down.
Right, up to 100% of median.
Fantastic.
Right, that's the one threshold, that's the interim threshold, right.
Okay, so you mentioned layering, and I just want to throw this out there as well. Sonia, you brought it up, and it's a fantastic, great thing. What I want our borrowers to also understand, and the real estate agents to understand, yes, you can layer, but some of the programs have different guidelines than MDEAT may have, right? So as an example, I know right now, Miami Gardens, I believe their cap is $382,000 as opposed to no cap with MDEAT, right? And their ratio guidelines are different. But if you fall within that ballpark and you are buying a home for less than $382,000 and you want to access the city of Miami Gardens and combine it with MDEAT's money, that's absolutely guaranteed, and you can do that. So $28,500 in addition to another $20,000 from city of Miami Gardens, $48,500, folks, to cover pretty much a majority, if not all, your down payment and your closing costs. So this is why I preach about these programs, and I love doing them. I've been doing them for so long because I know that they work, and I know that they can benefit families that are in need to be able to purchase a home, especially in this market, but in any market as well. So good. What do you think is going to now change with the program besides the income limits being increased, besides the subsidy amounts being increased? What do you foresee, hopefully, or what would you like to see going forward change with how people access the program and use the program?
Wow. I don't know if that's a trick question. Asking me to walk away from the company line and have Vince Burnett's opinion. But basically, I think, and again, I'd just like to commend the leadership in our department, where we're just trying to ultimately just try to have a within the context of prudent, affordable housing policy and being a good stewardship of these homeownership assistance program funds that we receive through surtax dollars. We're just trying to have a pulse of what this community needs, seeking, and on a side note, I know personally that I've spoken to Sonia as well as yourself. We're just trying to survey different realtors or housing professionals as far as what's wrong. I mean, with the current rent, the affordability crisis, trying to gradually, ideally, me personally, again, maybe we can have it where, for instance, as the income table limits go up, or the HUD maximum mortgage amount limits go up, and I believe HUD is like 475, 6% of that is about 28.5. So that's kind of what's the threshold of the thought process, whereas the 28.5 became the upper echelon of our subsidy limits. So as HUD maximum mortgage limits increase annually, well, maybe potentially we can just adjust as the market adjusts incrementally rather than having dramatic increases. That could be a possible solution. I'm not sure if it would be Miami-Dade Economic Advocacy Trust. You guys owe me about $5 each because you guys have emptied quite a bit. But maybe collectively, all of us, housing professionals, realtors, mortgage professionals, can address, I guess, this homeownership crisis. I mean, homeownership insurance crisis.
Yes.
Or if could be grants or subsidies to kind of outlay the cost of that. Because the premiums, I'm sure you do mortgages, how that escrow component, no matter what the grants are, that escrow, we can't control taxes because that's how we get our police and our fire, but that insurance crisis, as far as the premiums and particularly in underserved neighborhoods.
Right, absolutely.
And those premiums are, if you can obtain insurance is one thing, and secondly, the amount of those premiums really affect people who can really afford it the least. I'm not sure what the solution is to that. So those would be my personal thoughts. And the third one would probably be forums like this, just in terms of educating people, making them aware of the circumstances, make them also aware of the circumstances, but also making them aware of the opportunities.
Correct.
And getting with the right mortgage professional and real estate professional.
And that's what it's about. It's about ensuring that you have the correct real estate professional with you and the correct lender. Every lender is not cut out for every buyer.
Right.
And I say that all the time. Every inspector, every title company, you have to have a pool of people that you're working with. Mark, I know that you do a lot of work with the down payment assistance programs, and it's probably one of your specialties as far as I'm concerned. And you do a very good job. And now that you're collaborating with MDEAT,
and that ticker is rolling. I think I'm gonna have a good lunch after this.
Right.
Miami-Dade Economic Advocacy Trust. But go ahead.
Anyways, and the South Florida Board of Realtors, National Association of Real Estate Brokers. We are, in the new year, what we're trying to do is come up with a plan where we can give up to $1,000 for our home buyers.
Wow.
That, and how we would do that is, this is preliminary.
Right.
$500 could go to inspection. We pay that inspection. That would be up to $500. We pay that inspector directly. 500 could go up to 500 for an appraisal.
Okay.
Give that directly to the lender. Wow. And, possibly if they wanted to use 500, towards insurance.
Okay.
Up to $500. So, they could have their pick which way they want to do it, out of those three buckets, So this, Mark, you and I spoke offline about this because you have a first-time home buyer, maybe a single parent with 3 children. You got to buy groceries. You still got to pay car insurance, light, water. Even though you got this money over here saved, now you got to go give them $500 for an inspection.
Absolutely.
And you got to give a credit card for that appraisal.
That's prior to closing.
These are your pre-closing.
Although I'm sure you get them to the finish line.
Right.
I'm sure you
we figure it
get them
out.
to the finish line.
But we want we want you to get to the finish line
Yes.
without stress and gray hair.
Exactly.
We want this to be a happy experience. And, Mark and I talked about how many times we've seen people, they're so stressed out, coming up with the money just for little things. They have the great credit, but sometimes cash flow is just not there.
Right.
And so that's something that we're working on. And this is why we have things like our 2022 gala that we're having on December 14th.
December 14th, and where's that going to be?
It's at the Tower Clubs in Los Olas.
Okay.
It's from 6 to 10.
Yep.
You can register at NAREBSF.com events. And these funds, these monies that we're collecting, they'll go towards, helping people obtain that first-time home and for their inspection and their appraisals and their insurance. And it's also a toy drive as well. So we want everyone to come with a toy drive. We do everything with a purpose.
Right.
It is a gala, it's black tie. So we encourage everyone, realtors, real estate professionals, lenders, everybody, MDEAT.
I'll be there with my bucket to collect my dollars.
That's fine. That's fine.
I keep saying it just
No problem.
Just
No
about
problem.
it. No, I get it.
No problem.
So, wow, this is just tons of great information. I mean, you talk about NAREB stepping up and offering to, pay for an appraisal or pay for an inspection. A lot of our families, unfortunately, are struggling right now due to the recession, due to managing their money. And one of the things that I always urge them to also look into is working with NAREB, but also working with HUD certified counseling agencies.
Yes.
There are plenty of them out there. Shout out to Danny Felton.
Danny Felton, our second vice president, second national vice president. So one day soon, he will be running the whole organization.
Fantastic. And so he's in charge of a HUD certified counseling agency.
He is.
And there's many others, Opelika CDC,
Trinity.
Trinity Empowerment, many other nonprofit who are really helping first-time home buyers by the way of financial literacy, how to access money towards their down payment and closing costs, and basically how to really create a good budget for a first-time home buyer. Because, your budget is going to be different from when you're renting from when you are now a homeowner. So all of those things are really key and important. And we're going to share a lot of this information in our caption and when we run this again. But I will tell you this, folks, these organizations that are out there that you're hearing about, they work. If you're working with someone that's telling you, the programs, and I've heard this, the programs don't work. I had a bad experience. Don't let that be the deciding factor of not pushing forward. You just heard from the president of the South Florida NAREB board say, listen, we're willing to give you some money. You heard from Vincent here with MD about the assistance that they're giving. There's other programs that we're going to be sharing a lot of information on. And so, as we go into the holiday season, I know we just got off of Thanksgiving.
Yeah.
I didn't eat a whole bunch, so.
No,
You were doing TikTok videos.
Listen, I got
No karaoke.
I've got that commercial where they have leftovers until the next week, right? So but there's plenty of assistance out there, and I am so glad that you all came on. Go ahead.
And I would be remiss, and we kind of we've addressed it with education, outreach, and just seizing your opportunity and persevering through the challenges. And I want to also jump on. You mentioned the home buyer housing HUD approved counseling agencies, and that's part of what we've done at Miami-Dade Economic Advocacy Trust, where when they have these 8 hours, most of the courses are 8 hours, and we live in a post-pandemic environment where they can be live as well as they can be via Zoom, just as this forum is. And I've worked personally with quite a few of them, Opelika CDC, Little Haiti. You didn't mention them, but I want to mention them. Little Haiti, where that job is it's done in both Creole as well as English. I say everything in English, and I think they understand. They nod. And then the Creole instructor says it. Then they really, I say everything she said.
Right.
But the answer is that absolutely, that education, they do a great job, and the courses, even budgeting, credit, the home buying process, and and some of the opportunities after you own your home, I think they cover that as well. And part of the 14.5, and I'm coming back to the subsidy level, I would be remiss, of the 28.5, 500 is the subsidy that goes towards that housing counseling agency.
Fantastic.
Or for the 14.5.
It was at one point $250.
It was $250.
And now it's up to $500 for the HUD certified counselors
and
out there.
14.5, again, $500 would go towards that housing HUD-approved housing calculations. So that shows our commitment and how much we value the education piece as part of the process. Right. And one of the first things I say, and almost every lender program requires it, get that HUD-approved certificate. It's good for a year. Get with a knowledgeable realtor who's skilled in knowing what's out there in terms of the finance and the subsidies, but also certainly the inventory or lack thereof.
Let me say this. Yes. Last year, December, we put a lady in a home for Christmas. It was the best Christmas gift she ever had. Fantastic. She got a $40,000 grant from the city of Plantation.
Wow.
I had the listing on a condo, a 2-bedroom condo in Plantation. And the agent, she came to me and she said, I have a first-time home buyer. She said, everybody is scared to work with grants. She said, will you work with me? She said, we can't close in 30 days. She said, I'm just going to be honest with you. We probably, she said, maybe we can, but it's a grant. She said, will you work with me? I said, bring her on. Let's go.
Absolutely. Let's make it happen.
Let's go.
And that's your commitment to democracy and housing. And also your expertise and knowledge of how it works and what it takes.
Because you know what they showed me where
from the starting
she was
point
approved.
To the finish line.
They showed me this money is already allocated for her.
Absolutely.
It's just going through the process. The city of Plantation, it took maybe 2 weeks to cut a check. It's just the little things like that. But she's in her house with $40,000.
And I'm glad you shared that story because the reason is, a lot of folks, unfortunately, some realtors, some real estate agents think that the program may not work because it takes too long. So when they're out there trying to get the deal accepted, they're confronting a lot of listing agents that have had a bad experience or no experience at all. So one of the things that I love doing is sharing good information. If you don't like what I've said, call the administrators that are managing the programs and can give you better advice, okay? Call the real estate agent or the realtist that is working with that buyer and put them all on a conference call and say, hey, listen, we can get this done, but I will tell you, we can't get it done in 20 days. We're going to need 45 days on the contract. And especially if that property has been sitting on the market for over 60 days and 90 days with no real buyers intended, this could be an opportunity to put a first-time home buyer in that house accessing that down payment assistance. So I urge us to really try to start changing the mindset because I know that they do work, right? And trust me, I wouldn't be doing it as long as I have done it if they didn't work, right? So
you know what? That is my thing, Mark. That was my whole motto for my presidency. We are one.
Yeah.
Working together. And what you said is something that Claudia and Hibbert taught me, one of our past presidents. Get everybody on the phone.
Yep.
Bring them all together.
Exactly.
And that's exactly what I did. So that, I said, I told her, I said, chime them in. Chime that person in. I said, I got time today.
Right. Let's make it work.
If you want this property, bring them all on the call. So she started patching everybody in, and I said, okay, let's go.
Got it. So listen, I just want to leave everybody with this. It's a quick example of using the Miami-Dade Economic Advocacy Trust Program.
MD.
Okay. Here's a quick example.
I'm going to eat well after this lunch.
Okay, so this is a borrower who's buying a $300,000 property. Now, I know it's kind of challenging trying to find a $300,000 property in Miami-Dade County, so we decided to go ahead and add this with an HOA of $260. Now, folks, don't call me tomorrow or call me later today and say, oh, that's so unreal. Listen, I know it might be a challenge, but this is just an example of how this works. This is a family of four with the annual income. Now that we know for the family size of four is up to $78,000, not $73,100 for this past year. Now the monthly debt for them, their minimum monthly debts are $500 total, and this is at a rate of 6.875. So with the Miami-Dade MDEAT, I'm just gonna say
Economic Advocacy Trust. I hope y'all. Miami-Dade Economic.
Put another dollar in there for me,
Assistance.
okay? Assistance of the $28,500. That monthly mortgage payment total PITI is $2,623, and their estimated out of pocket is only $11,000 out of pocket. Okay, just as an example. But without MDEAT, the payment increases because we're financing more, right? And that payment is $2,729.68. Estimated out of pocket with not using that assistance, you're looking at $25,200.
That's a lot of money.
That's a lot of money.
Right.
The difference between the two is a savings of $14,200.
So you're going to pay more out your pocket,
Exactly.
and you're going to pay more monthly for the next 30 years. So.
Thank you. So that goes to my point of why this money's work. Now, you might say, oh, well, the payment is not that big of a difference. I'm not talking about just the payment difference. I'm talking about the actual now, right? The actual out-of-pocket now.
Get in there.
That's exactly what Sonia was speaking on
that's to your
earlier.
point. So, folks, they do work. I urge you, contact us. Let's get you into a home, whether it's the end of this year or next year, and start fresh. These monies are available and they're out there. So with that said, I really want to thank, let me just turn this around again for our Instagram followers there. I just want to say thank you to both Sonia and Vincent for taking time out of their day to really come on and talk to us not only about the great things that MDEAT, we'll talk about that later, is doing, right? But also the great thing that NAREB is doing, okay? As a huge organization that sometimes goes overlooked, and I just urge you to look them up, join. It's a great organization that's doing a lot of wonderful things. Just came off of a Thanksgiving drive that they did, and that was phenomenal. A lot of great families were very happy with, their gifts during the Thanksgiving and during the recession. It's a difficult time right now for a lot of families.
And it's going to get tough. It's going to get a little bit tougher out here.
Right.
I mean,
you got to be prepared for it. Absolutely.
Right.
All right.
And that's what we're here for.
Okay, and I thank you guys for welcoming me. I feel like I'm back in school.
You are. You actually are.
All you have to do is graduate. Everybody
That's
don't
fine.
graduate
Right.
magna cum laude. I was a thank you laude.
Okay.
I escaped the principal's wrath, and you guys are doing a great thing. I'm committed to NAREB and what they're doing, and I'm just.
And look, you guys got some great leadership down there. I know Bill Diggs personally,
Yes,
so
right.
he's a force.
Yes.
Right, and we're committed to just ensuring that Blacks get their equitable participation in Miami-Dade County economic growth, and also just the low to moderate resident of Miami-Dade County, that they can share in Miami-Dade's economic growth, and everybody can get their piece of the pie. And committed to you, Mark, in terms of just known you for a while back when I was working in Liberty City, and your commitment to affordable housing.
Absolutely.
So, and forums like this is what's another step in the journey to get to the finish line of home ownership.
Well, listen, I welcome you both back. We're going to sign off here now, but let me just say this. We're going to share a lot of this information in the caption. If you need more information, just look me up on Instagram or get in contact with me somehow, and I'll share all that information. And folks, listen, whether you use me as a lender or not, the main thing today was to provide information and knowledge for those of you who want to participate either as a real estate agent or even as a home buyer. So thank you and take care. All right? Bye now.
Bye, everyone.